Hello everyone and welcome back to the AMC Project Popcorn YouTube channel. My name is Ethan and today we're publishing video number 13 in the Daniel Meyer Transmittal Affidavit series. In this episode we'll be diving into the timeline from February 1st, 2022 through March 1st, 2022, and we'll cover 4 exhibits, number 9, 33, 24, and 16. We extracted the data from the Excel sheet, so if you want to look at it, stop the video and look at it. We got this data from here. This is the Excel sheet. And obviously we took it from the Daniel Meyer Affidavit, which is 928 pages and covers 37 exhibits. And we extracted the data into here. We have exhibit number as column A, pages as column B, the document and what's its reference to in column C. Column D we have the date, and column E we have the video that references this exhibit. Now if you look in reference to column D, you will see that these documents, the exhibits, are out of sequence. If you sort it by column D, you will get them running in sequence. And we could do it now just to show you. Right here, it runs from January 27th, 2021, and if you scroll down, the later exhibits or the later rows show you 2022, and then we enter 2023. The green represents the exhibits we went over, and today, as you can see, row 15, 16, 17, and 18 will be the 4 exhibits we're going to address. Now you can see it's referenced in column E, video number 13. So let's begin. Let's see. Okay. So let's jump in and continue connecting the dots. So on February 1st, 2022, AMC CEO Adam Aron tweeted pre-announced eye-opening quarter results in to his audience by stating that, and let's go to his tweet, "Today we pre-announced AMC's fourth quarter 2021 financial results. Meaningful milestones, positive EBITDA, more than 145 million, positive operating cash generated, more than 215 million, record year-end liquidity position, more than 1.8 billion. Then has the hashtag strongest AMC quarter in 2 years. Okay. And then, 8 days later, on February 8th, 2022, Adam Aron once again tweeted out some good news to AMC stockholders, giving notice that, let's go to the February 9th tweet. Importantly, actually, let's just go over it. You can see it's February 9th, 2022 at 11:16 a.m. And what does he say? Importantly, we just hired a new AMC Vice President, Ellen Copaken, has a ton of brand management and grocery experience at PepsiCo, Frito-Lay, and Hostess brands. Her first assignment for AMC will be to quarterback the rollout in 2022 of our new broad-based home popcorn initiative." Right. On February 11th, 2022, Adam Aron tweeted out to AMC stockholders, giving them notice that, let's go to the third tweet. You can see 2:45 p.m., February 11th, 2022. In January, the officially reported short interest in AMC rose by 13.8% from 94.8 million short shares on December 31st to 107.8 million shares on January 31st. I still have an interest in 2.3 million AMC shares, so I hope those short sellers are wrong. Only time will tell. I always had an issue of him tweeting something 3 times. Did anybody ever recognize, see that? Anyway, let's continue. Then on February 16th of 2022, Adam Aron tweeted out to AMC stockholders, giving them notice that, let's go to the 4th. Here's the date, 9/11, February 16th, 2022. And once again, 3 times. Well, would you look at this? Justice Department is pursuing wide-ranging investigation of short sellers. Federal prosecutors are investigating whether short sellers conspired to drive down stock prices. Wall Street Journal, February 16th, 2022. Was this lip service? Never got anything out of them. Anyway, I'll leave it at that. You draw your own conclusions. And then we extracted some people's responses to his tweets. And then we wrote, following Adam Aron's February 16th, 2022 tweet, hundreds of AMC stockholders tweeted back at Adam Aron. One person wrote, "You mean what we have all been talking about for the last year and a half." And then the next person wrote, "You certainly have enough info to know you should act decisively on your duty to protect your investors." And then another person wrote, it don't matter when 90 to 95% of our orders go through dark pools. Market makers should be investigated and dark pools regulated, or they shouldn't exist at all. And then another person wrote, and still nothing done. And then another person wrote, so how about them fake shares? ... Then someone tweeted at Gary Gensler, are you going to resign for not doing your job? Okay. Now we jump to February 17th, 2022. That's when there was an AMC board meeting. That's when we're going to direct our attention to Exhibit 9. And as you can see from this row, once again, this is Exhibit 9. Pages run from 6:15 to 6:24. It's the minutes of the meeting. It was on February 17th, 2022. And obviously video 13 addresses it. So let's go to 6:15. Sorry, page 618. You know what? Let's go to first 6:15. You can see Exhibit 9. Let's scroll down. You can see it's the minutes for February 17th, 2022. If you guys want to go over it, we're going to focus our attention on 6:18. So I'm going to scroll down, and we're going to go over this. Paragraph 8 here. So let's read this. So preferred equity issuance update. Mr. Van Zandt, for those who haven't watched the videos, it's actually Mr. or Derek Van Zandt, and he was our city banker, or former city banker. I think he now works at another bank. He worked for Citibank, and he was our investment banker. So Mr. Derek Van Zandt, AMC's lead banker with Citi for 6 years, provided background on company's preferred equity offering. He explained that company is now AMC. Company means AMC. Was short on common shares but had 50 million shares of preferred stock, which might be used to raise cash. Preferred stock offerings traditionally pay a high dividend, are convertible, and are sold to large institutions. Company is restricted from paying cash dividends and plans to offer the preferred shares to its retail stockholder base through a rights offering, which is common in Europe but less so in the United States. One AMC preferred unit would convert into 1 share of common stock, subject to the shareholder authorization. The preferred unit would be listed and trade on the NYSE and have an observable value. Our retail stockholders can purchase the preferred unit or sell the right, which is itself a tradable security. The rights are dilutive, so the shareholders are incented to buy the shares to avoid dilution. Mr. Van Zandt reviewed the mechanics of the offering, indicating that there were some gearing plumbing in the background, including through the use of depository shares. He reviewed the decision tree each shareholder would process. He explained that short sellers would need to deliver the right to the shareholder from whom they borrowed their shares, which would create demand and put pressure on short sellers. Mr. Van Zandt discussed various launch timeframes under consideration by management. Discussion ensued about the risks and opportunities associated with the preferred equity offering. So I just read this. All right, so now let's go to Exhibit 33. This is, once again, Exhibit 33. It runs from 871 to 886, dated February 22nd, 2022. Rights offering, Citigroup. And let's go to 871. So here's Exhibit 33. And for those who don't believe me that this is the Daniel Meyer Transmittal Affidavit, here's the URL. I maintained it from previous videos. Static.blbg Law, which is the law firm that was the lead counsel in one of the lead counsel out in Delaware on the consolidated class action lawsuits. And you can see Transmittal Affidavit Daniel E. Meyer in support of plaintiffs opening brief PDF. So let's go to 871, scrolling down. And here you can see Citigroup once again is the author, February 2022. Board briefing, potential rights offering of preferred stock. So let's go over it. Background. Since January 2020, AMC has raised over $1.9 billion from at-the-market equity offerings, improving its capital structure and setting up the long-term success of the business. AMC could benefit from additional equity capital to what? Further strengthen its balance sheet by deleveraging, reducing debt costs, increase financial flexibility to make capital investments, pursue offensive, opportunistic M&A. However, a lack of authorized share prohibits additional at-the-market equity offerings. Low retail participation in proxy votes makes obtaining an approval for authorization increase challenging. Now, potential usage of preferred stock authorization. The company has 50 million authorized shares of preferred stock. The preferred stock instruments usually consist of a cash dividend and a conversion or redemption feature that allows the security to eventually convert to equity or be repaid for cash. Current covenant restrictions on cash dividends and the high yields on AMC subordinate debt make structuring a traditional preferred offering what would appeal to institutional investors difficult. Alternatively, AMC could use its preferred stock authorization to create a security that has some elements of preferred stock and would automatically turn into common stock following an increase in authorized common shares. There are precedents for doing this known as common stock equivalents, or CSE, to the market. A CSE is a perpetual preferred stock that is convertible into common stock following a shareholder vote. AMC could call these AMC preferred equity units APEs. So here you go. Citigroup came up with the word APEs. AMC could call these AMC preferred equity units APEs. So distributing the security via a traditional marketed offering could be complicated. No certainty on conversion to common. No immediate cash dividend. No governance rights. Limited current institutional investor ownership in AMC. So alternatively, a rights offering of these securities is possible and has several disadvantages. Limits dilution as rights are only given to existing AMC shareholders. Transferable nature provides value to the rights holder, can be sold or exercised, while shareholders hold ultimate control through future authorization votes. It requires borrowers of stock, example short sellers, to deliver rights or economic compensation to lenders of stock. They have the ability to potentially include shareholder incentives through NFTs. Although AMC current research indicates it will be difficult to provide an NFT to shareholders through their brokerage accounts. Now, equity capital raise solution for AMC. Selling preferred equity through a rights offering uniquely navigates the two primary challenges that AMC faces. Challenge: the lack of authorized common shares. AMC does not currently have any authorized shares of common stock to offer to investors. This constraint makes a regular way follow-on or convertible bond offering unfeasible. Solution: AMC preferred equity units, APEs. AMC has 50 million authorized preferred shares that may offer to investors. APEs will automatically convert into common stock following shareholder approval to authorize more common shares. Now we have retail-oriented shareholder base. AMC shareholder base is heavily concentrated with retail investors that are sensitive to dilution. Retail investors are also difficult to engage in registered public offering. Now, the rights offering format. A rights offering specifically targets existing shareholders and enables each shareholder to maintain their proportionate, I've been saying this, their proportionate ownership of AMC. There's a 30-day subscription period, allows sufficient time for AMC to message the transaction to shareholders. Now, what are AMC preferred equity units? AMC preferred equity units will automatically convert into common stock at a future date. Investors should be indifferent between owning the preferred stock versus common stock, given its automatic conversion feature. Security overview. AMC issues rights to purchase preferred stock to current shareholders and receives the proceeds. The preferred stock will publicly traded and will, for all intents and purposes, become a second line of AMC common stock. AMC requests shareholders to approve a new authorized common shares at future annual meetings. Upon an affirmative shareholder vote, the preferred stock automatically converts into common stock. The security could include incentives to increase its standalone appeal to investors. For example, PIK dividends rights to an NFT, but that could impact motivation to convert into common. See, their intent was always just to convert it. Why not allow them to trade independently? But that could impact motivation to convert into common. Illustrative securities mechanics. We got a rights offering and post-rights offering. We got AMC, we got rights to common stockholders. We have APE, cash. You exercise the rights, you get the APE. Then you go through APE shareholder vote. Then you convert to common stock, or APE remains outstanding. No shareholder approval. All right, so this summarizes what we went through. Now, what is a rights offering? A rights offering allows AMC to offer the preferred equity units to only existing shareholders. By exercising their rights in full, each AMC common shareholder can retain their proportionate ownership and avoid dilution. Illustrative offering mechanics. AMC files a rights offering registration. The transaction is publicly announced. Then you got a record date, T+10. It establishes which holders can participate in the offering. Then subscription begins, 30-day calendar. Holders of record have the option to subscribe and exercise their rights. Investors that do not participate may sell their rights to other investors or allow them to expire. The rights will be publicly traded during the 30-day subscription period. AMC's rights offering will differ from a traditional rights offering only because the investors are being offered the right to purchase convertible preferred stock as opposed to common stock. And then the subscription period ends T+40. Let's continue. So AMC preferred equity units offering detailed breakdown. I think we went over this from the previous. This was the mechanics. So we went over this. You could review it on your own. And then there's pricing. They discuss what happens to the price. You could look over this. And then the price offering sensitivity analysis, how much you could raise. And then they went over the timeline. And then they got the appendix. They showed other stocks that have set precedents. And that's it. So let's continue. All right. So let's go to paragraph 9. Actually, we did paragraph 9 in the previous video. So let's jump now. That was February 22nd. That was during a board's meeting. And now we jump to February 25th. Now, I want everybody's attention to this exhibit. It's actually an email thread between John Merriweather, who's our investor relations, and Shannon Rochford at the New York Stock Exchange. So once again, it's Exhibit 24. It runs from 8:41 to 8:46. Here's the date. We're going to focus on this email thread, and it starts off on February 25th, 2022, and it runs into April, but we're going to focus on the two emails, meaning the correspondence only in February. As we move through the timeline, you will see what happens in April in that email thread. So on February 25th, 2022, at 12:38 p.m., John Merriweather drafted an email with the subject titled APE ticker symbol and emailed Shannon Rochford at the NYC stating. So I'm just going to read it now and then we'll go over the exhibit. Hey Shannon, hope you're well. Can you remind me again for how long we have the APE ticker symbol reserved? Now here's a quick question. I've tweeted about this. When did AMC make the application to reserve the ticker symbol APE? Now, I've gone to their website, the NYC, and they say that a reservation usually lasts for 2 years. But let's see when it expires. So let's see how she responds, Shannon. So mind you, let's look at the time. So it's February 25th, 2022 at 12:38 p.m. She responds a couple hours later at 4:09. So Shannon Rochford notified John Merriweather via email that AMC had reserved the ticker symbol APE until April 28th, 2022. Now, big if, because we don't know, and that's why we continue to investigate. On the NYC's website, they say a reservation lasts for 2 years. That means they made the application for the APE ticker symbol sometime in April 28th of 2020. Now, mind you, we don't have concrete data, but I will tell you is I did reach out to her. So let's go to my email for a second, and let's look up Shannon. Actually, I'll show you in a different video, but let's continue. So she responds. All right, so on February 28th, 2022, Shannon Rochford emailed John Merriweather giving him notice that there are basically let's take it back. So she responds that the ticker symbol reservation lasts till April 28th, 2022. Later that evening, John Merriweather emailed Shannon Rochford to inquire about the process for extending the APE reservation. And she responds, on February 28th, 2022, Shannon Rochford emailed John Merriweather giving him notice that there are basically 2 ways the NYC can extend the life of the ticker. And these are the two ways. To extend the reservation, we, the NYSE, would need some kind of confidential or public filing that has the ticker in it. If we let the ticker expire, the second way is if we let the ticker expire, we could attempt to re-reserve it after 2 business days, but there's no way we can confirm that another exchange won't secure it first. So let's go to this exhibit, and we'll start off at 8:45. Actually, let's go to the top. Now, mind you, I told you this is an email thread that runs into April. So we're just going to focus on the February. So this is Exhibit 24. You can see it. We're going to scroll all the way down because it reads down up. All right. So Exhibit 26. So let's go from right here. So you see John Merriweather. It's what I read to you guys. Hey, Shannon, hope you are well. Can you remind me again for how long we have the A ticker symbol reserved? Thanks, John. Here you can see John Merriweather's email account, and you can see Shannon Rockford, her email account at the NYSE. So it's shannon.rockford@nysc.com. I actually reached out to her, and in a later video, I'll show you what, she never responded to me. I'll show you what email I sent. Here's the subject, A ticker symbol. So let's keep going. Let's see how she responds. So she responds, as I told you, a couple hours later at 4:09. She goes, "Hi, John. Until April 28th, 2022, Shannon." And let's keep going. Then he asks, once again, on February 25th at 5:25 p.m., once again from John Merriweather to who? Shannon. And he goes, "Thanks, Shannon. How do we extend that?" And then she responds on the 28th at 6:37 a.m. Mind you, he wrote it on the 25th. She wrote back 3 days later. Once again, still the same subject, A ticker symbol. She writes, "Hi, John. There are basically 2 ways we could extend the life of the ticker." And we went over this, 2 bullet points. If we want to extend the reservation without letting it expire, we would need some kind of confidential or public filing that has the ticker in it. And the second one, if we let the ticker expire, we could attempt to re-reserve it after 2 business days, but there's no way we could confirm that another exchange won't secure it first. Best, Shannon. Okay. And obviously you can see the next email he reaches out is in April 5th. So let's not get out of sequence. I want to stay linear. And let's continue. Now, on March 1st, now we jump ahead. This was February 28th when she last responded with the 2 bullet points. The next day, on March 1st, AMC closed at $18.32, and we had 516 million shares outstanding. You remember what the equation is for market cap. You multiply these values, and you get a market cap of $9.45 billion. So what happens on March 1st? It was an earnings call. And during this earnings call, Adam Aron remarked, there's a lot of things he addressed, but extracted some key points. So there's no plausible deniability for him. He says, "I keep on getting offers from our shareholders, for example, that they want to chip in and help us pay down our debt. I don't know exactly that's in the cards, but I do admire their passion and dedication to AMC nonetheless." Now, mind you, now that you guys are watching these exhibits and how what was happening behind the scenes, why would he deny it? Now, mind you, the market cap was 10 billion. We have a debt, what is it, over 5 billion, plus we have cash at 1.8. We could easily donate $1,000 a person and eradicated the debt. We could have done other means. Why was the only means to eradicate or do anything that's quote unquote beneficial for AMC was through dilution? And I'll show you the source. This is from Seeking Alpha. I copied everything. You could see the URL, Seeking Alpha, AMC CEO Adam Aron, 4th quarter 2021 results. I took all of it, then put it in a Word file to find the keyword that I'm looking for. Scrolled down, and then I found it here. So you could see it. Exactly what I read. So I read, "I keep on getting offers from our shareholders, for example, that they want to chip in and help us pay down our debt. I don't know exactly that's in the cards, but I do admire their passion and dedication to AMC nonetheless." Imagine, we still had $1.8 billion of cash. All right. So once again, Adam Aron's response to AMC stockholders' offers to help pay down the debt is vague. The truth is, Adam Aron couldn't be transparent with his stockholders because entertaining any such offers would have obstructed Adam Aron and the AMC board's plan and exposed Project Popcorn. And that's it for today. Hopefully you guys are continue to connect the dots, trying to the information that we give you. Hopefully you're retaining it, taking down notes, and connecting the dots on your own. Hopefully you're watching the videos in sequence, and hopefully you're learning something new and understanding what was going on behind the scenes and why this document, the Daniel Meyer Transmittal Affidavit, is so important. And with that said, hopefully you enjoyed this video. Video 14 will be published shortly. Hopefully you enjoyed Cinco de Mayo yesterday and you're sober enough to watch this video. Anyway, have a good day.